Now, Emmanuel Amoah-Darkwah is an economist in Ghana, and when we spoke to him earlier, we were curious about how different the crackdown is compared to the one 2 years ago. Take a listen to
This
the
is the
interview.
third phase of the entire cleanup of the banking sector. It started in August 2017 with universal banks, and then this was followed by the cleanup of the microfinance. And then the third phase that we saw last week was the savings and loan institutions. So this is a link to what the Bank of Ghana started in August 2017.
Now, normally a huge concern is with customers and businesses on whether their money is safe. Is it?
Their monies are safe. According to the Specialized Depositors Taking Act, the Bank of Ghana, as part of this cleanup, will have to ensure that depositors' funds are safe. The end game is to have a very sound financial sector. So in all the tiers of banking, from universal banks to microfinance and then to savings and loans, the end game for the Bank of Ghana is for us to have a very sound banking sector.
Now, just yesterday, the bank gave rural banks and microfinances until 2020 to meet capital requirements. Is this really feasible?
It depends. Discussions will have to go on in boardrooms between shareholders, between management and other stakeholders of these rural banks. The rural banks were asked to up their minimum capital to 1 million Ghana cedis and then onward to 2 million Ghana cedis. Some of them have not met the requirement yet, but it's expected that they will have to mobilize some more funds so that they will be able to meet the minimum capital requirement to operate as rural banks in Ghana. I foresee that we are not out of the woods yet. We are not out of the woods yet, and if they are not able to mobilize enough funds, they will have their licenses revoked, as we have seen with the other microfinance institutions and savings and loans companies.